All right, guys. Good morning. Morning, Ron, Alex. Nice to see you guys. How's everyone doing today? It's Friday. We made it. We're into December. Hey, Jerry. Good to see you. Guys, that was just me rambling this morning. So I'm sitting in front of my computer and I'm thinking, yesterday was pretty good. Like yesterday's class felt like a therapy session, didn't it? Talking about rules, talking about following rules, talking about fixing our brains to get ready to embrace the rules, to give ourselves an advantage. Um, English lit major, I write a lot of stuff. And this is kind of what I came up with this morning, guys. And I'd love feedback on it. And these are the things, like these are my truths. They may not be your truths, but these are the things that over the last 5 days, when I have focused 100%, guys, my trading plan for the last 5 days has been the exact same example plan that we post in the room every day, the exact same example plan that we talk about every day. And that's exactly what I've done this week. So we're good. Bobby T, give me a Y if you can hear me. I wanted to make sure you got in here. Maybe not. We will see. So guys, these are kind of the things that over the last 4 or 5 days, thinking about focusing on this exact plan, these are the things that kind of came to me. Maybe they help you, maybe they don't. I don't know. But what I realized, I can't control the market. Not at all. I can only control myself and whether I enter when the rules are met. Like that's the only thing I'm in control of. It doesn't matter how much I hope or pray. Doesn't matter how much I wish. That's all I'm in control of, is whether or not I enter a trade because my rules are met. And then I knew and I know that I have to develop trust in my rules. Knowing and believing that they give me a statistical advantage every time I take a trade. That statistical advantage is proving to myself, developing that trust, that my rules win more than they lose. And I have an edge. It's my job to trade that edge. Controlling yourself keeps you busy, for sure. I've got a sketch pad in front of me. And I think that you have to come to the realization and that honesty with yourself that if something wins 70% of the time, that it must lose 30% of the time. And that you develop such a trust in your rules that you always take the next trade when the rules are met because you believe wholeheartedly in that advantage. And your rules are going to remove emotion. They're going to remove anxiety. They're going to remove nervousness and fear. And if they don't, if your rules don't alleviate all of those negatives, then you don't trust your rules yet. That's one of the hardest things for people to come to terms with. They say, I know my rules, I have my plan, I believe in it. And I believe wholeheartedly that deviating from your plan means that maybe you don't trust it wholeheartedly. Not yet. And that's okay because it takes time to develop trust, right? And my job as a trader is to follow my rules every trade. To take pictures of everything that I do. Guys, I'm not here in this class learning to trade, but I take pictures of everything that I do. If I'm a new trader, I need to present in class for feedback. I need to make sure that I'm putting them in a spreadsheet so I can go and study these things daily to achieve my goals. And guys, I think one of the biggest things that you have to realize is that you can't practice the wrong trades. You can't build muscle memory doing things that negatively affect your trading. So that was it for me. I posted in the room. I've got this one. If you guys want me to post this in the room so you can have a copy, write your own copy, you know. Write. I'm going to call this Trading Truths for Me. Write a copy that speaks to you, that has this and gives you something to focus on if that's what you need to do. All right, enough of that. That was my good morning. Here we go. Let's do this. I'm excited about Friday moment, guys. But of course, every day we go to forexfactory.com, right? Want to make sure that we're not trading into news. Did anyone watch the way the S&P reacted to news this morning? Just dropped, absolutely dropped out of bed. It was fun to watch. It would have been absolutely horrible to trade. I knew that I didn't want to be in front of that because it was high impact. It was one of these red boxes. And because I had that high impact expected, I sat on the sidelines, I sat on my hands, and I did absolutely nothing. I actually refilled my coffee, sat down, watched it drop, hung out, waited for it to slow down, and then I took a rules-based trade. It was a great way to start my morning. I spend about 2 hours every morning looking at pre-market because I'm teaching you guys during the meat and potatoes of the day. And the patience, I've had 7 trades this week. 7 trades pre-market, that's it. Patience is a big part of what we do, not being in front of anything. So, yeah, short, Jerry. I like it. Actually, I don't know why I like it. I like it because you said it and you follow rules. Somewhere around 27? Oh, 21? All right, little stab back, momentum trade. Very nice. I like it. That's where it's likely to go. Let's use Fibonacci, right? Let's use Fibonacci for amazing entries. Let's use Fibonacci for wonderful targets. Love Fibonacci, guys. I'm wound up. I'm excited today. I hope you guys are excited too. I really am, though. Everything that we talk about today, guys, if you're brand new with me, I've only got 15 of you in here so far. I know I've got some new faces. Everything that I talk about comes from the education page. And I want to stress this as we go into the weekend. Anything that you need to look for this weekend, you're going to find on the education page. And there's 2 spots. There's a software user guide. And the software user guide is your NinjaTrader how-to. It is going to be connecting. It is going to be scaling charts, adding stops and targets, making sure that your ATMs are set correctly. It's going to be making sure that you can apply a chart template, moving those dots over market flow if you need to. Guys, there's a section, if we don't line up, if our fibs look different, things aren't the same, there's a couple sections. Repairing and resetting your data. It's a great way to start fresh. And then every weekend I do this. I delete my old charts and templates, and I get a brand spanking new start to the week. Every Monday morning, everything is fresh. I like to do this because anything digital, anything data, it can corrupt, right? Let's make sure that that's not a factor. Let's make sure that I have the absolute best of the best each and every time I go into trade. Down here at the bottom, there is a glossary of commonly used terms. And I'm just going to post this one in here right now. New users, I'm talking to you. Demos, I'm talking to you. People that are not in that 60, 70, 80% win percentage, I'm talking to you. Post your pictures or questions, guys. Participate in your own education. Don't be scared or intimidated. No matter how trivial you think they may be, I guarantee someone else has the same question. We've seen great examples of that all week. People coming in going, hey, but what about this? And then suddenly 5 or 6 people jump in. Hey, I was wondering that too. Yeah, me too. Guys, keep the conversation going. This is your class. This is definitely not a 3-hour lecture. This is a 3-hour conversation with you. The person that committed to wanting to be a professional day trader, to wanting to ditch their job, to have financial independence. So participate, be a part of it. And then go to the tutorial section right off the education page, guys. This is your everything. Everything that I talk about comes from this page. And I like it because the URL says building a foundation. It's exactly what we're going to do. We're going to start small. We're going to keep it basic. We're going to focus on advantages. And then your goal is going to be to grow from those advantages. To recognize when things give you a statistical edge, and then just learn to trade them. And for your first 30 days, Focus on the best of the best, guys. Keep it simple. Allow yourself to be a student. I was having a great conversation with someone last night. Why is trading so hard for middle-aged men, for middle-aged women, for people that have been successful in their chosen career? It's because you haven't been a student for a long time. You're used to being the person in charge. You're used to being the person with the answers. I want you guys to give yourself just a little bit of grace here. I want you to say it's okay to not be the expert. It's okay to be brand new, and put yourself in that mindset of being a student so that you can build that foundation and grow from it. So the first hour of class, we're going to talk about the high probability trend trade. We're going to talk about the rules. We're going to take a look at what those rules look like on your charts. And we're going to talk about the advantages that they provide, because your high probability trend trade is a trade that typically wins 70 to 80% of the time if you follow the rules. And there's the key right there, if you follow the rules. I'm going to give you the rules. We're going to talk about the rules. We're going to look at the rules. And guys, the rules are pretty simple. They come together on two charts. And your rules for that high probability trend trade are going to do this for you. They're going to teach you to read your indicators. You're going to become a chart reader. 90% of what you do is going to be reading your indicators. 10% of what you do is going to be taking a trade based on the advantages that your indicators provide. You will be able to, probably within the first week, you will be able to understand where the market is likely to continue, and then you'll practice that concept until you're so good at it that you take entries for high probability trend trades. You'll be able to understand where the market is likely to go, and you're going to practice this recognition so that you can make educated decisions on targets using Fibonacci. And then you're going to understand where the market is likely to stop, and you're going to be able to use these areas where the market is likely to stop, recognize them as areas that you shouldn't trade into, recognize them as areas that have created full reversals and give you an advantage to trade the other way. We're going to spend a lot of time talking about chart reading, the information that your indicators give you. But first, we're going to use them to recognize three rules for that high probability trend trade. And those three rules are going to come together on just two charts. Let me find my two charts. Reading left to right. Your largest, slowest chart is the 13.2. Guys, this is like a broad stroke of a brush. This is you, Wagner power spraying the side of a barn. You're going to understand the overall temperature of the market. You're going to be able to determine, what does that say? I supply the equipment, you have to do the exercise. That's it. You can do it. Guys, I just gave you an elliptical. It's up to you whether or not you're going to run it. 13.2 charts, your broad stroke of a brush. Guys, I want you to embrace the phrase, let the 13.2 lead the way. You're going to be able to recognize the overall trend of the market. If it's green, the background's green on your 13.2, you're in an uptrend. You're only looking for rules to be met for a high probability trend trade long. If the background on your 13.2 is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Trade with the trend, guys. You've heard the cliche, the trend is your friend. As you grow with the software, as you branch out beyond that high probability trend trade, you might take trades that are counter trend because of the advantages present. But in the beginning, if you focus on making sure that you're with that trend, it's going to provide you an advantage. Rule number 1 of 3 is met on the 13.2, gauging the overall momentum of the market. And then rule number 2 of 3 is also on the 13.2 chart, making sure that you're not trading into any of those areas likely to stop. All of this happens on one chart. And when rules 1 and 2 are met on that chart, that's when we go to a smaller, faster chart. And guys, I want you to recognize that it says entry, very large at the top with 3 arrows pointing at it. This is an entry chart. This entry chart is where you're going to refine that broad stroke of a brush. It's that smaller, faster chart, and you're going to be able to recognize that best of the best area, that spot where the market is likely to continue. You're going to use this point for entry, and when you do, it's going to help you minimize your risk and maximize your profit potential. So I want you guys to embrace it. 2 charts. In the beginning, keep it simple. Just 2 charts. And let that 2 charts, I'm going to close down need to reboot my Snagit. On those 2 charts, 3 rules. 3 rules, all designed to give you an advantage. Rule number 1 for the high probability trend trade says that after a breakout of Fibonacci, or after a new top or bottom that causes a full reversal, the small triggers must be strong and located outside of the large trigger lines. Rule number 2 says do not trade into any Fibonacci areas that are expected to hold. Let them break with that momentum. Rule number 3 defines your entry. Guys, I've simplified these 3 rules into a picture for you. Save this picture. Rule number 1 tells you that you must have strong triggers. Rule number 2 says no termination conditions. We're going to talk about all of these. Rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Those areas can be fibs, midbands, or 1-to-1s. Guys, this is your high probability trend trades in 30 words or less. Just below it, I've put in there what's the advantage associated with each rule. Well, strong triggers gives me the advantage of momentum. No termination conditions gives me the advantage of a clear path. Using that limit order to buy or sell an area inside of favorable large triggers gives me the advantage of an entry where the market is likely to continue. So guys, this is what we're going to focus on for the first 30 or 40 minutes. Recognition of the rules. If you're brand new, I'm going to ask you every now and then. This is the easiest way. Good morning, Ed. This is the easiest way for you to learn how to participate in this room. When I say, are you with me? Give me a Y in the room. Give me a Y in the room. Let me know that you're listening. Let me know that you're not getting left out. Rule number 1 says strong triggers. What are strong triggers? Well, in an uptrend, your large triggers are widening. Your small triggers have accelerated away from and created space between those large triggers. When my smalls are above the large and those large are widening, the odds are favorable for the market to continue up. Rule number 1 gives me the advantage of odds favorable momentum. In a downtrend, small trigger lines break below, accelerate away from those large trigger lines. Large trigger lines are widening, angled in the direction of the trend. Guys, this space lets me know that the odds are favorable for the market to continue down. Rule number 1 gives you that odds favorable momentum advantage. And we're going to commit to this look for the first 30 days, guys. High probability trend trade. Because when the small triggers work their way back inside, we call this a weakening of the large triggers. That weakening of the large triggers lets me know that anything can happen up or down. One gives an advantage, one takes the advantage away. So rule number 1 has us looking for odds favorable momentum. In an uptrend, we're looking for that high probability trend trade from the point on the 13.2 where the small triggers accelerate away until they return. This is going to be our area of opportunity. You'll see if you scroll back on your charts these tails where price has gone below the midpoint of the bar. These tails or these wicks, you're going to get in a habit of circling them because these are all potential entries for high probability trend trades within the window of odds favorable momentum. Same thing to the short side. Smalls accelerate away until they return. We're going to look for these tails or wicks and we're going to start circling them because it lets us know that there was a potential entry. So I'm going to ask, are you guys with me so far? Odds favorable momentum, giving ourselves the advantage of a market that is likely to continue in the direction of the trend. Let's look at a 13.2 chart and let's see how many times we've gotten that advantage this morning. Smalls below the large are wide, they're angled in the direction of the trend. I'm going to circle a tail. I'm going to do the same thing going the other way. Smalls have accelerated above the large. I'm going to circle a tail. Guys, I'm going to do this again, and this is teaching me a couple things. One, it's teaching me to recognize odds favorable momentum, but it's also teaching me that I may not have odds favorable momentum every step of the way, that there's going to be times where I need to be patient, where I need to wait for that best of the best, rather than chasing the market. Anything can happen, triggers. I have a tail. That's not my trade. Odds favorable momentum. There's a tail. There's a potential entry. So guys, I'm going to focus on this. And this was during news. And the coolest thing about this is even during news, even with that unpredictable market, these patterns tend to hold true. Guys, that's probably enough circles for our lesson here. Are you guys with me? Odds favorable momentum, the advantage of a market likely to continue in the direction of the trend. All right, so after rule number 1 is met, rule number 2 says no termination conditions. Guys, this one will save your bacon. The termination condition is simply an Fibonacci-based indicator that may reverse the market based on a comparison of that area and the trigger strength, the trigger lines. When we talk about these areas, good morning, Debbie W. Nice to see you this morning. We have blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line. It can be a magenta divergence high line. It can be a large chart midband if the large triggers are a full bar away. Or it can be any 3 divergence in the same area, 3 losses of momentum in the same area. These are conditions, these are areas that may reverse the market. Remember, rule number 2 gives us the advantage of a clear path, nothing in our way. So when I bring up this 13.2, Jerry, I tend to not look at the 21.3, but if that's my large chart rather than the 13.2, absolutely. But it's not a termination condition for the 5.1. It's a termination condition really on the 21.3. Let me see if I can answer your question. Let me pull up the 21.3. Are you talking about right here, Jerry? Same concept, right? Price reaches the area. We're about to go through this. This is a key area. Large don't make it, small do. So you'll just go through that process. Here's a potential termination condition with odds favorable momentum. Until it breaks, Jerry, it remains. So yes, I will definitely keep an eye on these. And then with this much momentum, if my 13.2 has that same momentum, and I don't know that it did, you can see that right at that key area, that's right where 13.2 started losing momentum, right? Sorry guys, this is a little advanced. And then as you come down, right at that same area, Jerry, do you see how you started getting those divergences, the small work their way in? So it's kind of trickle-down economics there. The 13.2 is losing momentum, the 5.1 is losing momentum, and then, guys, if you do get to the point where you begin adding charts, that largest chart was trading directly into a termination condition. So let's get back to terminations real quick. But Jerry, that's exactly how I will use the 21.3 if I'm going to use it. I'm looking for key areas that may ruin my day. So identifying a termination condition. I'm going to put the picture of the picture here, guys. 2 things have to happen. The first thing that has to happen is price reaches an area. What does that mean? That means that these price bars, when I say price reaches an area, I mean these price bars come down and reach that area of support. When price does reach that area, you guys have one thing to do. Ask yourself, where are my triggers? It's really a pretty simple concept. Price reaches the area. I put it up here. Where are my triggers? Well, if all of my triggers remain above that area of support, it's a termination condition. It's an area that's likely to stop the market, an area that may reverse the market. You see the same thing up here. Price reaches this area of support. Notice how no trigger lines have broken through. That's an area likely to stop the market. Because it is, it means no more short trades, right? Let it break. Rule number 2 says let an area break with odds favorable momentum before trading in the direction of the trend. So when is an area broken? When my small triggers and my large triggers make it below this area of support. Small triggers break, large triggers break, I have odds favorable momentum. Guys, it is absolutely go time. Let's look for a high probability trend trade. The area is broken, support acts as resistance. So I'm going to ask you guys, are you with me? Price reaches an area. Where are my triggers? That's how you're going to determine whether or not you have a termination condition. What's a termination condition? Termination condition is likely to reverse the market. It takes away the advantage of a clear path. Gary says he's taken all of his trades off before the open. Guys, you may not. That's going to be up to you. So when we talk about termination conditions, price reaches an area. Where are my triggers? Price reaches resistance. All my trigger lines remain below that area of resistance. Therefore, I can't go long. Rule number 2 is not met. Price pushes all the way back down to support. None of my trigger lines have broken through. They all remain above the area of support. I can't go short. Guys, remember when we said 90% of what you do is going to be reading your indicators? Let me show you the picture that I took this morning. Everything's patterns. Price reached resistance. None of the trigger lines broke through. It's a termination condition. Price reaches support. None of the trigger lines break through. It's a termination condition. My large triggers remained a full bar away, letting me know, even more so, that this is an area likely to stop the market. Now guys, I want you to look at this picture from the S&P this morning at 7 a.m. Eastern. And look at this picture from crude oil, probably taken 2021 sometime. Looks similar, doesn't it? Price reaches resistance. Can't go long. Price reaches support. Large triggers a full bar away. Support holds. Comes up and retests resistance. We get what's called a pivot stop out. Price exceeds this magenta divergence line. All the triggers remain below. It's reached resistance 2 times. All triggers remain below. And then it trades the opposite direction. These pivot stop outs, when they come from key Fibonacci areas, can be market reversers. These, I'm not sure reverser is a word. These are the ones that create those big moves the other direction. So when this termination condition creates that full reversal, when that full reversal gives you odds favorable momentum, guys, this is your best of the best per the first 30 days and beyond. Focusing on the trend trades that happen after a termination condition on the 13-2. Whoops. That's your best of the best. When that termination condition that causes a full reversal comes from a high, we call it a strong top. It's a good top. A good top increases your chances of success. When that termination condition comes from a low, there's another one of those pivot stop outs. Full reversal, odds favorable momentum. This is a strong bottom. Giggle, giggle. It increases your chance of success. One of the things new users love to do is ignore that advantage of a clear path. They say, well, I've got odds favorable momentum. The market is likely to continue in the direction of the trend. But price reaches one-to-ones here. None of the trigger lines are able to break. This is, by definition, a termination condition. This termination condition first creates a bounce. Guys, we're not the only ones that see it. Institutional traders see these key areas. That's why the software is so powerful. You have the exact same tools that the institutional traders have. The numbers that they're selling and buying at, the numbers where they're having fights, you can see long before the market ever gets there. This termination condition creates a full reversal. Small or large triggers go from red to green. It gives us odds favorable momentum. There's one of those pullbacks. Guys, this is rule number 2, the advantage of a clear path. It's like driving your car into a wall. You may get to the other side of that wall, but the odds are favorable that you don't. Sometimes there's no wall there. Sometimes that market tends to pivot. It seems like from the middle of nowhere, right? Pivot, didn't reach a key area, but it headed down. Didn't reach a key area, but it headed up. Guys, this final termination condition is going to help you identify this on a smaller, faster chart. 3 divergences in the same location may terminate a trend. That's 3 losses of momentum. Each time this negative number prints, a cyan divergence line prints to the right from a low, a magenta divergence line prints to the right from a high. This lets me know that there was a loss of momentum in that push down. When it happens 3 times, it may terminate the market. It becomes more powerful when your small triggers are inside of the large triggers at that 3rd time. Notice how they go from odds favorable to anything can happen. You're coupling anything can happen with 3 losses of momentum, gives you a little push up. Same thing happens up top. 3 losses of momentum, anything can happen triggers, starts that push down. This on your 5-1 chart is going to help you identify change faster than you can see it on the 13-2. So when you see 3 divergences in the same general location, it may be an indication that this is happening. So guys, these are your termination conditions, the advantage of a clear path. Let's go back to the S&P. And let's put some indicators on this thing. Let's get some of those Fibonacci areas, one-to-ones, resistance, support, divergence, highs and lows. And let's see how many of these circles had termination conditions. I'm just going to work my way backwards. Smalls are through the area, the large are not. Odds favorable momentum, area not reached. Let's keep it. Same look going the other direction. This one, price has reached the one-to-ones and your trigger lines have not broken through. I'm going to get rid of that one. Everything's breaking down below. There's a tail. There's a tail. Price reaches resistance. The small trigger lines have made it above. Odds favorable momentum. We'll keep these tails. Same thing here. Same thing here. Guys, it's been an active morning. And then we have one more right here. So I'm going to keep each and every one of these circles. Look at that market go. And guys, now we're going to focus on the best of the best. Now we're going to focus on what I feel really sets us apart. And it's those trade entries. Being able to identify the area where the market is likely to continue, pinpointing with accuracy where the market is likely to continue. Remember, 13-2 leads the way. 13-2 has odds favorable momentum to the upside. We're in an uptrend. 13-2 has absolutely nothing in the way, the advantage of a clear path. And this is what my 5-1 chart's going to look like, guys. There's going to be a tremendous amount of green bars. I'm going to focus my attention on my 5-1 large triggers. They should be up. They should be strong. Favorable large triggers mean that the large and the synthetic are trending one on top of the other. That is your best look. I'm just going to start looking for areas. Remember, rule number 3 says that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Areas can be midbands, can be Fibonacci support or resistance, it can be one-to-ones. So I've identified my first 2 rules are met. I've looked at my entry chart, my smaller, faster chart, and I'm recognizing these areas of support that are falling within large triggers. My job is to use a limit order to buy a pullback. A pullback is nothing more than a small retracement in price. So after all of these up bars, I need a down bar or a reversal bar. And that down bar lets me know that the pullback's beginning. So this is where I'm going to create my window of opportunity. My brother coined the acronym. I love it. Looking for my woo, and I like it. It just makes me laugh. My window of opportunity is going to be that highest area of support inside of favorable large triggers to my lowest area of support inside of favorable large triggers. This is my window where the market is likely to continue. Guys, I have pinpointed it. I know exactly where it is. I know that this area gives me a statistical advantage. So I'm going to right click right at the top of that window for longs. And I'm going to activate a limit order, meaning that the market has to come back to me. It has to come to me in order to fill this trade. It either does or it doesn't. I don't control that. Remember, I'm not in charge of what the market does. The only thing I can do is activate an order when I have odds favorable momentum, when I have no termination conditions, and when I have identified my window of opportunity. Guys, at this point, I am long, 79.21. I have all of these advantages in place, and my protective stop typically starts 12 to 14 ticks. It's pushed below the window of opportunity, below those one-to-ones, below those large triggers. This is my initial stop. This is the area where the market shouldn't go, meaning that if price pushes all the way down below that window of opportunity, this is no longer my trade. I'm out of the trade. It's the cost of doing business. I had a statistical advantage. I'm trading an edge, and this one didn't work, and I'm okay with that. And I'll take this trade 1,000 out of 1,000 times because 70 to 80% of the time, this is going to be your result. Target reached. When the market pulls back, notice that it's circled, reaches that area of support, begins to move in the direction of the trade. I'm going to reduce my risk. I'm going to put it a couple ticks below that reversal bar. I go from 12 to 14 ticks, typically down to 5 to 7 ticks. Because I waited for the pullback to the best of the best area, my profit potential is increased. My risk is reduced. So guys, are you with me here? Going to use a limit order to buy a pullback to an area inside a favorable large trigger. So far on the ES, what have we done? We've circled tails when we had odds favorable momentum. We kept those circles if there were no termination conditions. We're going to go back and look at our 5-1 right now, guys. This is how you study. This is great for you guys going into the weekend, building trust with this look. If this circle lines up with that support inside of favorable large triggers, if our circle in a downtrend lines up with resistance inside of favorable large triggers, guys, we have a high probability trend trade. We have the absolute best of the best. So let's go do that. Let's study. Where's our first circle? Man, this market's been moving today. There we go. Right around 9 a.m. Guys, there's our first circle. So let's talk about 50-50 trades. Your first medium probability trade. Before we do that, Let's define them. Everything that we've talked about so far today, guys, is a high probability trend trade. A high probability trend trade, your first 30 days. Give me 30 days. Each indicator on every chart agrees with the rules for the trade, okay? This is strong triggers. This is nothing in the way. Room to your target. This is the best of the best. This is your first 30 days teaching you to read your indicators. After 30 days of nothing but high probability trend trades, you're probably going to incorporate medium probability trades. Your ability to read your charts has prepared you for this trade. And it means that most of your indicators line up for a trade. However, a small issue exists. Your ability to read indicators is going to help you identify that small issue. And this will be the vast majority of your trades is what you're going to find. When you're executing medium probability trades, you'll take these trades and manage them assertively. Your ability to read charts will allow you to manage them assertively. If there's trouble in your way, you may take a portion off at the trouble spot. Your ability to read charts will help you identify that trouble spot, and you can reduce your risk to a 0 loss level. The first medium probability trade that you guys are going to work in to what you do, let me get these off of here, is when your small triggers have broken through an area, but your large triggers have not. This is what we call a 50-50 trade. And it's not because that's your chances of winning. You could call this a straddle trade, a one above, one below trade. But what it is it's medium probability. Your small issue that exists is that this area has the potential to break, but it has not yet broken. The large triggers haven't made it through. When I have a medium probability trade, the entry on the 5-1 must be perfect for new users until you really get comfortable. That means no divergence on the 5-1. That means strong triggers on the 5-1. That means small window of opportunity. That's your best of the best for a 50-50 trade. Guys, I'm going to give you this picture. Put this one in your spreadsheet. We're going to talk about how to put this stuff in your spreadsheet. This is a great one to keep. And if you stick with this plan in the beginning on these 50-50, on these medium probability trades, it's going to set you up for success. So here we have a medium probability trade. Small trigger lines have broken through. Large trigger lines have not. No divergence on the pullback. Smalls are outside of the large, and a tiny little window of opportunity right there at those large triggers, those 1-to-1s. Guys, if you entered this trade at 27, I don't know, it's still going off my screen, but that's 9 points. 9 points before it ever slowed down. So this is a high probability. Actually, this is a medium probability. Best of the best. Whoops. We've got a checklist to help us identify. I've posted these in the room. I'll post them again. Is the market coming from a good top or bottom? I can't tell here. Do I have odds favorable momentum? Yes. Do I have no termination conditions? Yes. Do I have an area for entry? Ed, you're saying if you enter at the mid-band, is the mid-band right by those large triggers? What's rule number 3 say, Ed? And I love that you posted that. Use a limit order to buy or sell a pullback inside of favorable large triggers. Here we're a tick below. I consider that close enough, right? Here, I'm a full point below. I'm anticipating that pullback to the area inside of favorable large triggers. Does that make sense, Ed? It's not just a pullback to an area. It's that area inside of favorable large triggers. I want you to see, look what price does on your large chart. Pulls right back to the large triggers. Pulls right back to the large triggers. This is why we look for areas inside of those favorable large triggers. That makes sense? Okay, good. Guys, this is what the class is for. You're going to have aha moments every day of your life. Every day of your life, you're like, oh, okay. So let's go back. Another 50-50, right? Smalls are through, large are not. What did it look like? Well, I had divergence on the pullback. Maybe not our trade. Hey, Paul. Smalls are through, large are not, divergence prints, not my trade. No matter what happens, that's not my best of the best look. Smalls haven't made it through here. Guys, you're going to watch some of these go away in the beginning as you develop your skill set. Let's see what happened with these down here at 840. So here's our first one, 50-50, no divergence, pulls right back to that area right at the large triggers. Do you see it? From 21 all the way down to 16, 5 points. Beautiful. Once again, 50-50, divergence prints. Look how this thing scrambles. And it ultimately changes direction. This is an area that has not broken. It has the potential to break. No divergence and strong triggers gives you the best shot at success. Once those divergence start printing, you lose that advantage, and you can see exactly what happens. Guys, give me a Y in the room. I took this picture the other day. It looked exactly the same. New users. This helps a lot. 50-50 trade. What does it mean? Let's annotate this one so you can put it in your collection. 50-50. Small through, large not. Area has potential to break, but has not broken. 5-1 entry needs to be perfect, right? To still have that advantage. So now let's annotate here. First entry, strong triggers, no divergence, winner. Second entry, divergence prints, it gets stopped out, market reverses. How common is this? How many times have you guys seen this? You get a 50-50 trade, it looks perfect, you take it, you get paid, and then you start seeing these divergences and things go sideways and you miss out. Ron, you said why. What was the why to, just so I answer the question right? Why should it be perfect? Why is this one better than this one? I love it when you guys ask questions. Oh, I got you. Sorry. I confuse easily. So guys, take this picture. Put it in your spreadsheet. Everybody's using their spreadsheet, right? Let's get that link and let's call it, let's put it under put it under the trade setups, but let's call it 50-50 best entry and not best entry. So we can come back and study it and make sure that when we're taking these 50-50s, we give ourselves the advantages that we need. So far, guys, we have 2 trades that fit the rules. They've gone for over 20 points. That's not so bad. That's your day. You're on the golf course. 50-50, right? What's our entry look like on the 5-1? Divergence, prints. No areas inside of favorable large triggers. Do you guys see how this isn't your trade? That's not my entry. Here's our next one. There's a termination condition that creates a full reversal. That full reversal gives me odds favorable momentum. The first pullback, I don't have an area inside of favorable large triggers, do I? No trade. But that second little pullback, caught that one right at the best of the best spot. I got paid on that one this morning. Hopefully you guys did. Is that it? Rules-based entry, right? I have trust in the advantages. That was effortless. My ATM was a little wonky, so I had to make a little extra money on it. But man, that was easy. So far we're 3 for 3, guys. 3 that fit the rules. Oops, sorry. 4 that fit the rules that produced winners. Nope, sorry. 5 that fit the rules that produce winners. Of course it is. Shane, you're going to have the potential to take a little heat on every trade that you take. Be prepared for it. There's a reason it's a window. And Ed, you're absolutely right. After a while, you'll be able to identify. It is. It's very much a mental issue. So, Shane, were you here for my first little musing? Jerry S. That's where I'm at right now. 87.5% winners by following the rules. That's my week so far. I'm up just under $1,500. Remember, I only trade pre-market. Some days I only get one trade. I was talking to John last night. I was like, you know what? All these people in the room chase everything. All these people in the room try to catch every move instead of the best move. And I told him, I said, I'm going to spend 2 weeks and I'm going to focus on this 100% best of the best, guys. And I'm trying to prove to you, and I'm trying to prove to myself, that I don't need anything else. I can keep taking this. I mean, that's only $1,500 this week, right? Wouldn't that produce like a $6,000 week? $36,000 month? Could you guys live off of that? 36 grand a month? Some of you can't. Some of you have. He's getting set up. He got great news for that, Jerry. They're going to hopefully be able to do a discectomy and not have to fuse. So a lot less. Guys, what's 36,000 times 12? I'm not good at math. Any of you guys do that in your head? 36 to 3 times 12. That's not so bad, is it? Shane was an English Lit major too. Guys, that's a 2-lot trading pre-market. Assuming, and hypothetical of course, assuming that the trend continues. I'm going to have bad days, right? Everybody's going to have bad days. I'm going to have losing days. And I'm going to have days where I do a lot better than this. 10 lots, 2 million. So guys, your job is to trust the process, to embrace the process, and make sure that you're following rules. All right, so we're going to do this and then we're going to take a break. Oh, I love this. Guys, look what Paul just put in the room. This is one of those conversations I was having. Read that one. The guy that had the software said he's not a good gauge for how long it takes because he played around for a long time and it takes several months to get comfortable. And it's hard to be truly disciplined on sim. Can I get an AM? An amen, right? Because you have to trade discipline. No, let's see if this works because you're bored. And when you take that couple weeks and you really start to focus on the best of the best and you work that discipline, it works out. Discipline and patience, guys. Jerry, I wake up about 5:30 Central. My charts are up and the first cup of coffee's on board by 6, so I've got about 2 hours each morning. I think I've taken 2 trades in the last 2 days. 100% winner, $650 on a 2-lot. Not bad. But I'm really going through right now this 100% trust, right? This making sure that that I'm doing the best of the best of the best. All right, guys. I want my new people. I want my sour apple candies. I want my Johns. I want my Shanes. Let's pick an entry. Guys, everybody's invited to play along, but I want you new guys. Here we go. Market's railing down. Odds favorable momentum, right? Guys, is rule number 1 met on my 13-2? You have to tell me or I'm not going to move on. Rule number 1 is met. 100%. Is rule number 2 met on my 13-2? Nothing in the way. No termination conditions, right? Guys, this is the look that you have to believe in 100%. This is the advantage of odds favorable momentum. This is the advantage of a clear path. This is what your 5-1 is going to look like. Everything says down. Has anyone ever heard of the fear of missing out? We've all heard of this, right? This is where it starts. You perfected it. This is where the fear of missing out begins, especially if you didn't catch this one. Because you're thinking, oh my gosh, there's all this momentum. There's nothing in the way. I'm not going to get paid. And you start thinking of reasons to jump in. What do the rules tell us? When this is our look, we start looking for what? Areas of resistance. You see it? There's one mid-band. That's the only thing I have going on in the form of resistance. But what do I need? What are we waiting for after all these down bars? Somebody help me out. Looking for an up bar. Thank you, Shane. Dun, dun, dun. Dun, dun, dun. Because this is after the fact, there's our little giveaway. We know where it's coming from, right? Here we go. Missing out, right? Good way to build bad habits. If the rules are met, I have to take the trade. There's my reversal bar. Let's create a window of opportunity. Guys, this is my favorite look for a window of opportunity. Where's my area of resistance inside of favorable large triggers? How amazing that it's one line. Guys, this is the area where the market's likely to continue. So what do? I'm going to right click and I'm going to activate a limit order, a tick or two below that area, because I'm not going to trip over pennies and miss dollars, right? As the market comes up, that mid band comes down. Is it worth $12.50? Drop it a tick to make sure you don't miss it. Market's coming up. Oh, we're on a collision course, aren't we? Boom. Guys, you are now in the market. No, Shane. Run a lap. Where's my squirt bottle? But you won your last trade, didn't you? It's right there. Yeah, you did because you followed rules. Okay, so we're in at 1575, guys. My initial stop. Let's give it 3 ticks. Or 3 points. 12 ticks. 1875. Here's my initial stop. Where the market shouldn't go. Right? So I'm in. What are we waiting for to move that stop? My reversal bar showed me where I was looking to enter. What's it going to take to move the stop? Boom. There's my reversal bar. Now the trade's going in the direction. I'm going to move my stop 2 ticks. So now I've gone from 3 points. I'm at 2 points of risk, 8 ticks. It's $100 risk. We're going to talk about this. My first target from 1575 is going to be 1375. I'm going to take profits at 1375, $100. And then from 1575, I'm going to look for 1175, $200. I'm trading 2 contracts. I have $200 in risk. I'm looking to make $300. When my first target is reached, go and break even. I have $100 in the bank. I'm break even. My first target is reached. I can't lose, and I'm looking for a $200 second target. Guys, that $100 in the bank builds confidence, makes me feel good. I'm not worried about anything. I have the advantage of momentum. I have the advantage of no termination conditions, and I have the advantage of entering where the market was likely to continue. And down it goes. And I'm just going to stop. Oh, there we go. There's your second target. I close out the position. And in 2 minutes of my life, I'm up $300 on a rules-based, high probability trend trade. Guys, your job is to learn to believe this to a point to where you execute each and every day. It's going way past. When I get back, guys, we're going to talk about your plan, especially going into the weekend. We're going to talk about your plan. We're going to talk about building a plan. We're going to talk about creating something that you can adhere to each and every day. Giving yourself a statistical advantage each and every time that you take a trade. David B., have a great weekend. Go enjoy yourself a little bit. Look at what we have right now, guys. 50-50 with divergence, and look at it push down. Do you believe it yet? If you don't, talk to me. Let me know. Keep taking pictures. I'm going to take a few minutes. I'm going to run a lap, refill my water. Guys, by the end of today, I want you to be comfortable studying the way we just did it. Because what I really want you to do this weekend is I want you to come back on Monday and tell me that I'm full of crap, that this doesn't work. Yesterday on YouTube goes live, had a nice gentleman calling me a charlatan, telling me that this stuff doesn't work, that I'm full of crap. Guys, do your homework, back test it, practice it, see if it works. It works for me. Make it work for you. Make that decision. I don't like it when people call me names. I'll be back in a few minutes, guys. And then we are going to go into that second hour. We're going to talk about writing a plan. I'm going to give you guys checklists. I'm going to really just kind of do anything and everything that we can do to get you where you want to be. I'll be back, guys. Worked for 8 years, Jerry? Still working, isn't it? If you ask Siva, it's worked for the last 17. Just saying. Maybe some people are willing to work harder than others. Maybe some people have plans, maybe some don't. I'll be back in just a few, guys. Let's get into the second hour. I'm pretty excited about it. Let's go through something real fast so that we can get to the live market. There's all sorts of goodness going on here. Having a good time. But I want to put these in the room for you, especially heading into the weekend. Guys, this is, in my opinion, the most important step as you create your plan. To recognize odds favorable momentum, no termination conditions, looking for a pullback to an area of support inside of favorable large triggers. I mean, come on, guys. The S&P could not make it any easier for you today. Now your job is just to work that plan, work those rules over and over until you become so stinking good at it, it's second nature. How do you do that? Let's write a plan. What do you say? This is an example of how to write a plan. Guys, this is not a pre-built, prefabricated plan for you. Everybody sees things a little bit differently. But if this is your first 30 days, this could very well be your plan. Guys, this has been my plan literally for the last 4 trading days this week that I've traded. And the first thing to do is to write down the phrase, my trade is. Personalize it, own it, make it yours. I mean, this is your trade, right? This isn't John Novak's trade. This isn't Paul's trade or Gary's trade or Ron's trade. This is Shane's trade. This is sour candy apple trades. This is John's trade. And John, you put a comment up here. On Sim, you only have 3 red bars down. I'm not sure what you were talking about there, John. I'm going to put it in there real quick. If there was a challenge with software or something, or you feel like there's a big lag, let's look at it and see if we can get you fixed. That's an important thing. All right, my trade is, embrace it. My trade is the high probability trend trade. I'm in my first 30 days. My trade is the high probability trend trade. I'm not above 50% winners. My trade is the high probability trend trade. I'm not making money consistently every day. My trade is the high probability trend trade. Guys, why not? You know that it's a trade that when you follow the rules, it typically wins 70 to 80% of the time. Who doesn't want that? So now we work on it so that we can develop the trust. In order to enter this trade, we are only defining the entry point. In order to enter this trade, the conditions of this checklist must be met. I just put the checklist in the room for you. This one's been uploaded. It's right there. In order to enter the trade, conditions of the checklist must be met. Is the market coming from a good top or bottom? Is the market coming from a termination condition that creates a full reversal? Guys, if you answer yes, bonus. It increases the likelihood of success, but it's not mandatory. It's these next 3 that you want met without question. Do you have odds favorable momentum on the 13-2? Notice that it says 13-2. Be specific. No termination conditions on the 13-2. Area for entry inside of favorable large triggers on the 5-1. If you commit to this checklist, if every trade that you take a picture of fits these rules 100%, the odds are favorable that you're going to win more than you lose. And then we're going to use that camera, guys. You need to be comfortable with your camera. Take pictures of your perfect entry. Put them in your spreadsheet or put them in your plan. Couple in your plan, maybe from the spreadsheet, my personal trade setups. I've got like 60 of them at this point, 55. And then if there's entry conditions that need to be met, and guys, this is, remember when you add that first medium probability trade, that 50-50 trade, you might say on a 50-50 trade, no divergence should be present on the 5-1. If you're gonna have a condition, take that picture, right? Get that screencast link. Look at this. This is perfect, talking about exactly what that condition means. And put that link in there. There you go. Now I have a picture of it. I need small triggers outside. Guys, this is your first 30 days. But you need to write it in your voice. You need to write it in a way that you understand it, a way that you'll commit to it. Once you've identified your best of the best conditions for entry, guys, you have to define your management plan. What are you going to do with that perfect entry? Well, in the beginning, you're probably going to keep it very mechanical, very methodical. And you are going to say something like, and this is a way that I like to say it, and I didn't mean to close that out. I will trade 2 contracts. My initial stop will be 12 ticks, adjusted above or below the window of opportunity initially. Be moved 2 ticks above or below the reversal bar in the direction of my trade. I will take profits on my first contract at $100, move my stop to break even manually. My second target will be $200. Guys, this is a very mechanical approach. This is an approach that takes out emotion, that takes out opinion. It doesn't give you time for fear. It's a couple of small movements of your mouse to manage the trade. 100 trades into this in your first 30 days, you're going to have a lot of pictures of that perfect look. You're going to begin to develop a management plan. You're going to begin to identify and understand when you can hold for bigger moves. When your smaller, faster chart tells you that it's time to get out of a move before that target is reached, you're going to develop a management plan to go with that great look. Are you guys with me? If you haven't downloaded that example plan, guys, download it. Get it. Write your own this weekend. And then here's my invitation to you. If you've written a plan and you want me to review it, email it to me. Just send it to me, marknovak@nexgent3.com. I'll look at it. I'll give you my feedback. Feedback might be, hey, this is perfect. Feedback might be, hey, let's get some pictures. Let's talk about your management. Let's be more specific here. I want you guys to recognize that this entire plan fits on one piece of paper. Simplicity is key. All right, guys, we've gone through all the shenanigans. What's the best look? Where are my advantages? Look at this, guys. Anything can happen triggers. 2 losses of momentum runs right through it, doesn't it? Reading our indicators to establish advantages to keep us out of trouble. I'm going to go back now. I'm going to scroll through. There's a lot of great pictures in here today. So I'm going to go up to the top. Whoo, we have a lot of them. And I'm going to start looking at the pictures that you guys have posted. We're going to start and see what's going on. Here's the first one. We actually worked this one out together, right? 100% checklist. Is the market coming from a good top or bottom? It most certainly is. Do I have odds favorable momentum? I sure do. No termination conditions. The mid-band does not act as a termination condition because the large triggers are not a full bar away. Did I have an area for entry inside of favorable large triggers? Absolutely. Easy money. Ron C. Termination condition, lets everything clear, gets in, gets his money. Ron, you are so consistent. I absolutely love it. Gary, smalls above the large into a termination condition. And it looks like it got you. But then you break that termination condition, get in at the best spot, get paid all the way up. I love that. And Gary, this is a great example, isn't it? Termination condition, not necessarily stopping the market, but creating a bounce big enough, you're out for a tick. When you let it break, There it goes. Very strong lesson there. Very strong lesson there. Let me see where we're at. Guys, I have to scroll back and forth a little bit. So I go to my charts, then I see your charts, and then I have to go through, and we get to where we want to be. And I scrolled all the way into yesterday, so oops. All right, Gary, let's see what you did next. So guys, if you ask a question while I'm talking about charts, I'll do my best to get to you. But I'm going to scroll back and forth. Alex G, let's see what you did. Alex G says strong triggers. Alex G, those are your strong triggers. These are trending down for sure. Good look. No termination conditions. Strong trigger lines. Only one divergence. You take the picture perfect entry. Quick profits on a medium probability trade because you don't have odds favorable. Quick profits. That second divergence, you manage out, don't take a loss. That third divergence starts to push it the other way. Alex, picture perfect. Great job. Gary, 50-50. Not coming from a good top or bottom. You do have odds favorable. Can't see your 8 range. 50-50 trade. There is no divergence. If you decided to take this one, you could take a 50-50 without divergence. It's okay to not take that trade though. Looks like it would have worked. 50-50, no divergence, strong triggers, in at the area, in at 69, out at 89. Take your money and run. Shane, anything can happen triggers, right? Lost the momentum. And I'm going to scroll down so I can see if I'm missing any comments here. Especially on the newer folks. So Shane, anything can happen. Medium probability, right? You recognize it? That's important that you recognize. Okay, cool. Odds favorable momentum on the 5-1. Anything can happen, no termination. You get in right at the area inside of favorable large triggers. You put your stop where the market shouldn't go. It looks like you're looking to take some quick profits on the way down. Hopefully that one worked out for you. But because you've lost momentum here, because you've lost momentum here, you've given away the advantage of momentum. So now you're just counting on no termination conditions, and you're counting on that area to give you a bounce. First 2 contract trade, that worked out. Awesome. You took it perfect. There's something to be said for following that checklist and taking the right entries. Guys, I'm a big fan of medium probability trades, not going to lie, but you have to understand what makes the medium probability trade. You have to understand why. Why is it a medium probability trade? So that you understand that it does need to be managed a little more aggressively. I keep scrolling up way past where I need to be. Let's see. Let me see where I'm at. That was yesterday. Holy smokes. I scrolled way too high, guys. Sorry. There's a lot of messages on this server. Gary, me, Alex, we got you there. Shane, we just got you. Gary, let's look at you. Guys, I'm not going to scroll down the comments for a second because I keep missing them all. Gary, you say you missed the first entry. That's okay. Odds favorable. Looks like a fib there. Potential 50-50. You enter. Quick profits. Use a tight following stop because you only needed 300 to hit your goal of 2,000. Nice job. Ron, termination. Everything clears. Make a little money. You say this one's not done yet, so you make a little bit more. Nice job, Ron. Very consistent. Very consistent, guys. Sour apple candy. Or sour candy apple, sorry. You say that you're positive this chart ain't all too well. What does that mean? What's that mean to you? It looks perfect to me. I got triggers and mid-bands and divergences and one-to-ones. But without seeing that 13.2, I don't know if I had a trade, but that's a great looking chart. Gary said he's following the rules today. 100% winners, $2 grand. It's not a bad day, Gary. Good job, man. Keep doing that. Believe in the power. Believe in the power. Sour candy apple once again. I like it. You're showing the chart. Couple things. You're not on the most current bar here. Nothing is highlighted in black. Whenever you don't see it highlighted in black, hit that white arrow. John C., that may have been your challenge as well. If you ever don't see that black highlighted bar, hit that white arrow. It'll bring you to the most current. Guys, there's a 50-50, right? Small's below, large or not, medium probability, no divergence on a pullback to a mid-band inside of favorable large triggers. Paul, termination, small's below the large, perfect entry, nice target, exited with divergence. And then you decided to enter again and kind of gave it back. Nothing wrong with that trade, Paul. This was a better look than this one was, I think. The triggers kind of started to work their way back up on you. Bobby T, taking that momentum style trade. Termination, odds favorable. Break the area, snap back, get in, take it down. Bobby T, that's a good looking momentum trade. Love everything about it. Paul, odds favorable, one divergence, perfect entry, quick profits on that 50-50. Back in the positive, great work. Gary, loss of momentum, 2 losses of momentum, and it pulls back. You saw it after the fact, that's okay. Guys, I want you to think about this real quick. And Gary, this is for you as well. This is for everybody. Let me take a picture of the picture. So the advantage of momentum. If this is losing momentum, right, still can be a great medium probability trade. A small issue exists. If you've already lost momentum twice on your smaller, faster chart, and couple that with the loss of momentum on your 13.2, guys, there's a lot of indications that things may be pushing a little deeper. There's a reason that odds favorable momentum gets us to that next area, and why that anything can happen look. Anything can happen isn't horrible. That anything might be more continuation up. But then two divergences on the 5-1 say be just a little bit patient. Paul, go make a snowman. Brenda, nice to see you this morning. Good morning. Let's see what you're doing. You're letting the smalls break above the large. No divergence on a 50-50 to the pullback. Making money. You get that second pullback with odds favorable. No termination conditions. Making money. Say you're in at the marker at the 10-2 reversal after divergence prior. Small triggers gone green above the large triggers. Held it to the resistance. Took another trend trade pullback with the fibs all good on the 5-1. I love it. Hey, 10KM, does that feel better than chasing everything? Yesterday, you were trying to use 4 charts to figure out if one line was going to hold. Today, you waited for momentum, no termination conditions, pullbacks. That's it. Isn't that easy? I love it. Guys, I'm really focusing on simplicity right now. If you're not consistent yet. All right, Gary, are you with me? That's cool. You were in a trade. No worries. We even took pictures of it. So, Gary, rule number 1's not met, right? Anything can happen triggers. Guys, I like the words associated with it. I think that it helps you. Because anything can happen doesn't feel like an advantage, does it? Not even a little bit. 10KM, always good to call it an early day. So if I have anything can happen, what does that mean? Losing momentum. And it looks like you already figured this one out. So anything can happen, I'm losing momentum. Now I'm losing momentum twice on the smaller chart. You gave away the advantage of momentum. You gave it away on both charts. And I think this look, Gary, isn't detrimental if this is your trigger look on the 13-2, right? If you have odds favorable momentum on the 13-2 and a couple divergences with the smalls outside of the large, I would take this trade every day. But because you had already lost momentum on the 13-2 and then you couple it with that double loss of momentum on the 5-1, I really think you gave away any advantage that rule number 1 gives you there. Well, if you got distracted, Gary, you shouldn't have pulled the trigger. That's my story. I'm sticking to it. Sometimes, guys, I'll do that sometimes. I will look at my charts and just absolutely seize up for some reason. And I'm like, okay, I can't take a trade right now. And I've watched perfect trades set up, but I've found myself distracted. Paul, nice job, man. What a great looking trade. You and Barinder, same. Boom. Beautiful, beautiful, beautiful. Let's do this every day, guys, for the rest of our lives. 50-50, no divergence, perfect entry, trouble spot. Gary, perfect execution. Perfect execution. AK Sid. You know, I've been looking at that at AS Kid. I've read that AS Kid every time in my head. So let's see where we got in. 80.95. There's that one. So you got in up here. 50-50s. Pull back to the mid band. Great entry. Out at support. It's hard to go wrong with that one. Isn't it? The advantage of momentum. I mean, goodness, guys. Can't stress it enough. Can't stress it enough. All right, let's do it again. What do you say? Class participation time. 13-2, guys. Is rule number 1 met? Do we have odds favorable momentum? Are the small triggers above the large or the large wide? Are they angled in the direction of the trend? Odds favorable, yes. And then Ed just popped it in. Ed says, man, this is a 50-50, Mark. This area is not quite broken. It has the potential to break. The smalls have broken through, the large are below. 50-50, right? Someone tell me, someone wow me real quick. If I have a 50-50, what do I want my smaller chart to look like? Give me one word to describe my entry conditions. Clear? Perfect. Bobby T, I like yours. Paul, I like yours. Perfect. What is perfect? If you haven't defined perfect, take a second and define it. No divergence, strong triggers, small window of opportunity. That's perfect for a 50-50. All right, so I'm looking at my 5-1, right? Everything says ups, 50-50. I'm coming from that fib. I'm just kind of looking. Where are my areas? Where are they coming together? I've got a mid-band a couple ticks above those large triggers. I've got 1-to-1s. And I've got blue support. I don't know if it's going to be in there. I'm just kind of scouting. What am I waiting for, though, to make a decision on my window of opportunity? What needs to happen? All these up bars. What you waiting for? A down bar. Absolutely, Shane. Because we're patient, right? Because we wait for the best of the best. There's your down bar. Let's talk about windows of opportunity. What do you guys think? What do you see? I know what I see. Mid-band. So AK Sid, we've got our pullback. It just started, right? Now we're defining. Where's our highest point? Shane, you say fib support. Ed, you say 1-to-1s. I agree with 1-to-1s on the bottom. Shane, I don't know if I'm with you on the fib. That fib is a full point above the mid-band, which is a half a point above my large triggers. That fib is outside of the area, but that's okay. Shane, there's your entry. Tick or two above support. Cool? Let's do it like that. We don't all have to agree, guys. It's a solo sport. Market comes back. All right, Shane, you're filled at 49.25. Where's your initial stop? If it's 12 ticks, it's 46.25. Isn't that still inside the window of opportunity? I've got 6 points of risk on this one. Ugh. That's a lot, right? Is 6 points risk worth it on a 50-50 trade? There's no divergence. I don't think so. I wouldn't do that. I don't think I would enter in an area that's not inside of favorable large triggers. There's your mid band. This is probably where I would get in. 48.25, we'll call it 48.50. Look at how my window of opportunity changed to the bottom as well. So a couple things to think about, right? Ed, you're saying synthetic fill. Where's your area inside of the synthetics? Don't have one. Remember, guys, your window of opportunity can change a little bit, can't it? Pretty cool, right? Ed, you say 47? All right. Where's your area, Ed? Which area am I trading from? Am I trading from a mid band? Am I trading from 1-to-1s, or am I trading from Fibonacci support? I can't see it on my chart. Can anybody help me identify it? Nobody? Nobody else sees something. Mid-band, I'm already in. So Ed, your rules say trade from a large trigger. Is that on your plan that you wrote out? My plan says trade from an area inside of favorable large triggers. And guys, neither of us is wrong. Ed's plan is Ed's plan. My plan is based on being brand new, giving myself every advantage. Ed, you might have gotten filled. Got lucky. I'm filled at an area inside of favorable large triggers with the best chance of success. I got my reversal bar, right? That's what we were waiting for. So I'm in at 48.50, 2 points risk. Absolutely. So Shane, and I love that you did that, but one of the things that you're going to recognize more than anything else as you begin to develop this pattern recognition is price pulls back to the large triggers all the time. Price pulls back to the large triggers. We'll pause for just a second. Price pulls back to the large triggers. Price pulls back to the large triggers. Price pulls back to the large triggers over and over and over again. And that's what gives us our ability to identify these amazing entries. Kind of. So price pulls back to the large triggers, and we look for the areas inside. So Ed S., I like your idea of waiting for the large triggers. For me, these areas act as a backstop. Did anybody play Little League? I ask this every now and then. Did anybody ever play Little League? I was a catcher. For me, these areas inside are very much like the backstop behind me as a catcher. Price comes back, and now I've got these solid walls for it to bounce off of. That's why we trade from an area inside of favorable large triggers. This is John Novak right here. He was a pretty amazing pitcher. I played catcher. It was great for backyard practice sessions. But I always had a fence behind me because every now and then he got a little crazy, threw a wild one. These areas inside of favorable large triggers act as my backstop. So we're in, right? Oops, where did it go? We're somewhere over here. I don't remember where we were. I have no idea where the 13.2 was, but our rules are met. We're in just above the area of support. We've gotten a reversal bar, so our stop is below. 48.50 to 50.50 is $100, right? 52.50 is our $200 target. Are you guys with me? We're in it. We waited for the area of support inside of favorable large triggers. Shane, if you got in at the fib when everything came to be, it's still a good looking trade, right? You're okay. You have to be willing for the market to move against you just a little bit. It's going to, guys. It's cyclical. It's fear and greed. It's emotion. We don't control it. Heads in the direction. There's $100 in your pocket. First target reached. Good job, guys. You're up $100 on one contract. And now you're at break even because we're mechanical. We're methodical. Price pushes up. Uh-oh. There's a divergence. There's a down bar. If that's what your plan says, Ed, yes. My plan is very methodical. Mine says when I take profits on the first contract, I'm going to move my stop to break even. Because right now, my main focus is catching the absolute best of the best entries. And I'm not concerned about the management plan so much. This very mechanical management plan, it keeps my emotion out of it. It keeps my fear. It keeps my greed. It keeps my hope out of it. The only thing I have to remember is that little snippet. That's it. All right, guys, I just got stopped out. I made $100. What do you think? 50-50 trade, the area hadn't broken, right? It had the potential to break, but it didn't. Where's my 13.2 chart? I'm losing charts here. There it is. That was at 10:34. So that was a 50-50 trade. No divergence, enter the trade, $100, break even. Shane, do you see what price did? Pulled right back to large triggers, didn't it? And that's what happens on a 50-50 when divergence prints. Perfect entry, manageable. Conditions change, get the hell out. How easy was that? Guys, this is our goal every day, is for you to keep building these repetitions over and over and over again. AK said you can do whatever you want. That's the disclaimer. What does your plan say? My plan, the way I teach it, says that I have to trade from an area, and those areas can be mid-bands, one-to-ones, or fibs. That's it. That's what I'm looking for, because these have been shown over the last 25 years to be the most likely chance for a spot to potentially continue to give you an advantage. So that divergence line, and actually this is a great segue to a question. This divergence line doesn't print until the third bar. You don't even know it's there until you're 3 bars into the move up. Your entry was at the mid-band and it just didn't get you on this one. Great question though. But when divergence prints, it's 3 bars in. And AK Sid, once again, click that white bar. Click that white arrow. Get current. Check it out, guys. Definitely not anything can happen triggers, or definitely not odds favorable momentum into a termination condition. No trade. No trade. El Samo. I just like the name. This is a newer name. It's nice to have you. Let's take a look. And I think this is the one that we were just talking about, wasn't it? El Samo, are you familiar with the concept of the 50-50 trade, when the small triggers are broken but the large have not? And we just walked through this one bar by bar. Your entry was right here. Your entry was at the area of support inside of favorable large triggers. When this divergence printed on your 50-50 trade, this was your indication that it may push back further. Your best chance of success would be to wait for everything to get to the other side. Here you had an advantage that needed to be managed, and then you get into that no man's land. and then you just have to patiently wait. Your divergence on the 5-1 gave you an opportunity to recognize change happening on a smaller chart. That change pushed you out of your trade and forced a little bit of patience to get you to that next. And let me put this picture in here again. By the time you got to your entry, hands wouldn't have been a bad option. Here's a good looking picture of kind of what happened going the other direction. You have that 50-50 where it's not perfect. Save this picture. When there's no divergence, that little window of opportunity, that's how you take these trades with the best chance of success. Once those divergences start printing a little bit, that's when you start getting those losses of momentum, that little bit of indecision. And that's exactly what happened here. Your first pullback had no divergence, gave you a big enough bounce to take profits on the first one, and then manage out of your second position. When you took your entry on the second one, your smalls had already turned against you, so you didn't have odds favorable momentum. You didn't have an area inside of favorable large triggers. One large trigger was turning. The other large trigger was going up. Your small triggers were below everything. Not your best look. Look at the difference between this area and this area. This area to me says you're darn right I have a chance of going up, doesn't it? This area says, man, I sure hope it goes up, but it doesn't feel good. Does that make sense? And welcome to the class. Nice to have you in here. And that is an outstanding looking dog. So what we try to do, Al Samo, every time is wait for odds favorable momentum, wait for no termination conditions, wait for an area of support inside of favorable large triggers. When the trade begins to move in the direction of the trend, reduce your risk. And sometimes that stop gets hit. Sometimes it doesn't. No worries. Guys, how do we feel about this one? Here's that nervous moment, right? Small's above the large. We haven't reached an area. No divergence on a pullback to a tiny window of opportunity. If you entered above the window of opportunity, you already got your reversal bar. Your reversal bar allowed you to reduce risk, and that one didn't work out. Split triggers. Was it worth 1.5 points for the potential to go to the next key area? Guys, you got to lose every now and then. You can't win 70% if you don't lose 30. Things that weren't perfect. I love perfect when I'm brand new. Here's 2 looks at trigger lines as you enter a trade. One look has trigger lines trending one on top of the other. Hey, good morning, Ben. Your synthetics and your large are one on top of the other. Your window of opportunity is tiny. Guys, this is your absolute best of the best look. The more those trigger lines split, the more you give away your advantage because price returns to the large triggers. One place your large triggers are consolidated, infused with that backstop. One place your large triggers are split and wide. Here they were split. It's still got a bounce right off the bottom. Not even a vacuum, Ed. When we talk about a vacuum, we're talking about when price reaches an area, typically specifically the mid-band, but not always. When price reaches support, 1-to-1s here, the large triggers remain a full bar away. This is what we talk about when we talk about the vacuum. And it's that phenomenon of price wanting to go back and close that gap. The same thing that happens on a 13.2 that keeps you from trying a short here is the same thing that happens on the 5.1 to get you into that best of the best look. Does that make sense? 70 degrees. Nice. Ron, go have a good one. You guys can do it, and I do mean that. I really do, and we appreciate the prayers very much. She's still in and fighting right now. Antibiotics are doing their job. We talked a lot about this yesterday, guys. Insisting on the best, right? How many of you buy those $2 steaks from the back of a truck in the mall parking lot? And how many of you go to the butcher and pull it out of the case? Insist on the best. You're worth it. Are you drinking Boone's Farm? Are you drinking Rothschild? Pabst Blue Ribbon? Or whatever your favorite beer may be. I don't know. Half a cow once a year. Even better, Ed. Because you know that it's quality. You know that it's good. You know what's gone into it. Guys, why should your trading be any different? 50-50 trade. But it's coming from a pivot, kind of in the middle of nowhere. Smalls are through, large are not. There is no divergence potential on the 5.1, right? Where am I coming from? I'm coming from the middle of nowhere. One thing I recognize about pivots that come from the middle of nowhere, guys, is they push back and a fight happens, and very often they make it to that next area. Let's see if we've seen that phenomenon. Pivot from beyond the area, pushes back, dances at support, finishes the move. Pivot not from the area, pushes below, finishes the move. Pivot from beyond the area, pushes back, they fight again, pushes back, that one finished the move. Pivot from below, pulls all the way back to that mid-band, finishes the area. Guys, if you don't believe in the power of Fibonacci, go back and look at this stuff. This is 3 divergences in the same general price range. Right into the key area. We have to see how it reacts at that key area, right? Finish the move. But it doesn't always, does it? We still have to read our indicators. You go out to the field and point at the cow you want. My wife's grandfather used to do that. Grandpa Jack. He would take a cow and a pig every year and fill freezers for the family. It was good stuff. Guys, I'm going to leave you with the S&P for a few minutes. I'm going to take a break. I'll be back in a few. I keep drinking an awful lot of water. I will see you guys in just a few minutes. If you have questions, I want you to put them in the room. If you have pictures, I want you to put them in the room. Guys, this last hour should be driven by you. This last hour. There you go. Brenda, are you using Snagit or Capture? So Capture you can't. And I know that's not the answer that you want. If you want to be able to copy paste it, you're going to need Snagit. It's $63. But once you have Snagit, you can copy that picture from the bottom. You can paste it directly in. And we'll see if mine's working now. Mine's not letting me do it today. But usually I can take it and just slide it and drop it right in too. It's $63. If you're going to do this professionally, if this is your career, Drop that 63. I do love me some Snagit. It's got all the bells and whistles. All right, guys, I'll be back in just a few. Here we go. Heading into lunchtime on a Friday, right? Ed, if you get Snagit, can you move all your picks from capture? Here's the cool thing. Whether it is Snagit or capture, Ed, they all save. So everything that you have is going to be in your screencast account. So you'll be just fine. So guys, smalls below the large. 50-50 at 1-to-1s. No divergence. Perfect entry, right? Divergence prints. It pushes higher. This is the exact same picture that we've taken 5 times today. No divergence, strong triggers, easy entry, bottom of the window. It goes down almost 3 points. Higher divergence, pushes it higher. Game over, right? 50-50 with divergence. Why? Why hope? Hope is no good. Here's a termination condition. If this is really going to be a bottom, if 81.23 is going to be the bottom, this is going to happen. These triggers are going to roll first. What are your large triggers doing on your 13.2? They're still down strong, aren't they? Ben, I love that picture. I feel like we've spent a lot of time focusing on 50-50 trades. We've spent a lot of time talking about when you have an advantage and when you lose that advantage, haven't we? How many times do you need to see it until you believe it? Ben believes it. He said, man, I'm going to make some money. And then GTFO, TTFM, right? Tiny bite of the elephant. In at 47, out at 44.50, 2.5. 2.5 points, guys. That's not so bad, is it? When you reach an area with this much momentum and it hits that mid-band and everything is still down, guys, brace yourself for a retest. Chart reading. You want me to say it again? When you have a term, those large triggers are still down. Large triggers are split. No trade to be had. Nothing to do right now, either market. So what do you say we go to the tutorial section? Guys, remember, last hour is yours, so I'm going to babble until you give me something to babble about. Market replay. Are you using it yet? Do you go back, replay the day, fix your mistakes? Guys, this is your step-by-step path to becoming a confident trader ASAP. How nice is it that Nexgen gives you a step-by-step path? Look at the 2 things in blue. Post your trades in class. Track your real-time performance in a spreadsheet. Those are the first 2 steps. Guys, let's go through. The first one, learn your trigger line, Fibonacci rules for when it's okay to trade. When's it okay to trade? When the rules are met. That should be your only answer. Hey Mark, is this a trade? I don't know. Are your rules met? Hey Mark, can I go long here? I don't know. Are your rules met? You have to decide what those rules are going to be. I gave you a fantastic starting point. Your market replay is broke. You used it too much. It wants to start at 4:49 a.m. every time instead of midnight. Ed, I'm not sure why that would be. It's interesting that it's 4:49. I'm not sure why that is, Ed. I've never seen that. Reach out to NinjaTrader. Oh, there you go. Reload charts and templates. There you go. Thanks, Ben. Guys, simulate your trade daily. Your trades daily. Notice that it says simulate. It doesn't say, hey, you've been doing this for a week. Why not go live? Simulate. Post pictures in class until you're sure you have the correct rules. I am officially giving each and every one of you permission to be new right now. You're not going to have the correct rules every trade. There's going to be something going on. Maybe you missed a termination condition. Maybe you didn't have odds favorable momentum. Maybe you didn't trade from an area inside of favorable large triggers. Guys, I am going to be that little voice on your shoulder that helps you recognize the mistakes that you don't see yourself. Don't practice the wrong trades. You're building muscle memory. Simplify your plan. What looks will you commit to? What do they look like? How do you know what they look like? You take an awful lot of pictures of them. And then after class, before the next day, download replay data for that current day that you just finished trading and go back and retrade the day, guys. Fix your mistakes. If you fought triggers, don't fight them. If you traded into termination conditions, don't do it. If you missed a trade, take it. If you took a trade that broke the rules, don't. What you're doing is you're validating the rules. You're creating that memory of success. You're going in and you're committing to your plan. Take pictures of the correct trades. Put them in your spreadsheet. Save them for class. And repeat this process every day until you always take the correct trades. I say this every time. It does not say until you always win. It says until you always take the correct trades. Remember when we talked in the beginning, what do your correct trades mean? It means that you're taking a trade that has been proven over time. I'd love for you guys to jump in and just take the correct trades and try to disprove it. But it's been proven over time to win 70 to 80% of the time. This last one feeds into what I just said. Once you guarantee yourself you can win, trade live money. What does it take to win? Taking the correct trades. What's the win percentage if you're always taking the correct trades? Do you see how that works? You're not training your brain to win, you're training your brain to follow rules. When you follow the rules, when you embrace the process, that's when the results happen. Does that make sense, guys? That's your path. It's been laid out for thousands and thousands of traders. There are people that follow the path that are trading successfully, that have been trading Nexgen successfully for years. There's people that try to do it themselves for a couple years to bypass that path. It's really up to you. It's been made pretty clear. It just takes work. The work is fun. I enjoy the hell out of the work. I hope you do too. All right, I'm going to share with you. So I had musings this morning, in case you missed it this morning. I posted this at the very top. These are my trading musings, guys. This last week has been amazing for me, very informative. That example plan that I put into the room for you guys, that's all I've traded this week. That's it, Shane. It's not the money that you should be chasing, it's the process. I'm realizing this, guys. My midlife crisis is golf. I went back to playing golf. And I kept saying, man, I want to get a birdie. I want to shoot an 85. I want to shoot a 90. I want to get an eagle. And what I never said for the first 3 months is I want to swing correctly. And then I started learning how to swing the club again after 20 years off from it. And then I started hitting pars. Then I made the occasional birdie because I focused on the process, what it takes to achieve that, rather than just focusing on achieving it. You know? So these are my musings from this morning. I want to share them with you guys. Shane, reset, right? Now you have this amazing opportunity to reset. There's nothing stupid about what you did. It's just your path, man. Everybody's path is different. Some people jack it up for years, some people jack it up for a week. The reality is that whatever it takes to get you to where you are right now, to get you to that point to where you realize you have to make a change, then it's all been worth it. It sucks a little bit, but it's been worth it. Because now you're motivated, now you're focused. Now you kind of have it in your head with market. Can't do it. No matter how much I try, I am very insignificant in terms of the market. I can only control myself and whether I enter when the rules are met, right? That's my first thing. And then I will develop trust in my rules. I have to develop trust in my rules. I have to practice them so much that I believe in them wholeheartedly. And I have to believe that they give me a statistical advantage every time I take a trade. Not that they'll produce a winner, but they provide me an edge. I know that my rules win more than they lose. Guys, the high probability trend trade has been tested by me, tested by John, tested by thousands of Nexgen traders. High probability trend trade has been proven over rigorous backtesting to win more than it loses. Another thing that you as a brand new trader has to realize that if something wins 70% of the time, it must lose 30%. And you have to develop such trust in your rules that you always take the next trade when the rules are met, no matter what the result was previously. How hard is that? Anybody taking a loser and then skip the winner? And then when you skip the winner, you get pissed off, so you take the next loser that doesn't follow the rules? I've done it. One thing you found is when you're not focused on the money and you're just having fun, it turns out better. Absolutely. I like talking through it, guys. I love talking through what I see in the market. That's how I trade. When I'm by myself in the room, my wife probably thinks I'm crazy because I'm up here talking to myself. Hey, I don't have odds favorable momentum. I do have odds favorable momentum. Kevin, thank you for posting that. Right there with you. Spent 6 months trying to prove that Nexgen was wrong. Guys, my best clients are the ones that worked hard enough to try and prove us wrong. Because if you legitimately try to prove us wrong, you're going to be an owner. There's no doubt in my mind. If you put the work in... All right. So Nexgen Jen knows I'm crazy because I talked to myself in the other room. If you put the work in to prove Nexgen wrong, you're going to buy it. Without a doubt. So guys, what do rules do for you? For me, they remove emotion, anxiety, nervousness, fear. That's what my rules do for me. I'm so calm when I take a trade now, guys, because I know that I have all the advantages and a methodology that wins more than it loses. And John used to say, I don't care if it loses. I followed the rules. And I thought, oh, that's crazy. Who doesn't care if it loses? I don't care if it loses. It's part of it. I'm okay with it. It doesn't affect me mentally. And if your rules don't remove emotion, anxiety, nervousness, and fear, guys, you don't trust your rules yet. You need to practice more. You need to see it more. You need to do more to believe it. So my job as a trader, this is what I've realized, is to follow my rules every trade. To take pictures, to present them in class for feedback. For me, presenting them in class means that I text my brother, that I Skype John everything I do, and then he gives me his 2 cents because I'm always looking for someone better than me to help me on this journey. And I put them in the spreadsheet so I can go back and study them. And then the most important thing, guys, I can't practice the wrong trades and build poor habits. I have to stay focused on the best of the best. Because every time I practice a wrong trade, I'm telling myself that it's okay to practice a wrong trade. Guys, these are mine. These are my truths. These are the things that I had. My epiphany this morning. I like to do that. I like to write it out. I like to say, okay, this is kind of where my life is. This is what I'm seeing. This is what I've learned. Do a little realization. I'm going to put it in the room for you. What are yours? What have you realized? What are your epiphanies? Write them down. Ed, you made $400 while I was on break talking it with Ben through here. I love it. Look at that 50-50 with divergence, guys. What did it do? Push that thing right up, didn't it? Remember we talked about that pivot, not from an area? Likes to finish a move. So what do we have now, guys? I have smalls through the area, larger below. It's a 50-50 trade, right? Can't I identify after that reversal bar my window of opportunity? But I have divergence potential. If that divergence prints, my rules say I have to cancel my order. If it doesn't print, there's my window of opportunity. There it is. Let's see if it works. Pivot stop out at 1-to-1s creates a full reversal. Gives me odds favorable momentum. That odds favorable momentum, I get a pushback with no divergence, pull back with no divergence. We're just talking through it, guys. I'm not telling you to take a trade. What I am telling you is that this is what the rules look like. I don't know what it's going to do. It might get me, it might not get me. I don't care. Gary, 50-50 with divergence, didn't get filled, came back down. Sometimes that happens, right? Sometimes we don't get filled. Paul, losing momentum, add a pivot stop out. You get in, that higher divergence gets you out. I like it. That's a good shot, right? No divergence. The area is broken. That key divergence low is not broken though. So you get in, things change, you get out. Nice trade, Paul. Good management. Look at that. Son of a gun. Didn't get me, did it, guys? Your chart has fib on 5-1 and 8 range at 40.54. All right. Trade your charts. Yep, it happens. It's not your money. You guys remember John Novak used to tell that story? You walk into a bank and you say, give me all the money. You get tased and thrown in jail. You walk into a bank and you say, hey, may I have my money, please? People are a lot more responsive. Am I still 50-50? Has that changed? Smalls below, large above, or smalls above, large below. What does that mean? Divergence is true on a 50-50. My plan says I have to cancel that order. Your plan may be different than mine. Some people will hold their ground till they get the fill. Remember we talked about how price loves to pull back to the large triggers? Where does that line up? A little bit lower. So if it keeps pulling back, guys, you have to be prepared for that. And it may just go without you. That happens sometimes, doesn't it? How was that though? We talked through it. That's all we're doing every time, right? We're just talking. Next. Didn't get me. $50-50 with a metric ton of divergences. Paul, I like it. 100% rules met. Bit weary because you've seen those lose a lot before. There's something about the triggers here. They seem a bit flat, like they aren't committed to going up. So Paul, when we looked at this one and we talked about it live, you do have the split triggers. Notice that it comes right off the bottom of those split triggers. Not the best. That's the only thing. That's nitpicky as all get out. That's the only thing we could find wrong with this trade. Everything says up. You've got odds favorable momentum. You're at the beginning of that acceleration. There's no divergence. There's a tiny window of opportunity. Hell, you even got market flow confirmation. You can get in. I'd take that loser every day, Paul. Every day. Wouldn't think twice about it. Here we go. Termination condition creates a full reversal, gives me odds favorable momentum. Still 50-50. Guys, you want to know a true story? The more you learn to read the indicators, the more you're going to see, and you're going to try and predict what the market does. You're going to say, man, I know that this is a termination condition, but I really think it's going to go up. 75-25. I hear you, Ben. So there's two divergences. Small still outside. Let's see if patterns hold true. When I get a pivot stop out up here, it loves to pull out. It loves to pull back to that previous pivot, take it out. Where does that put you? Right at the large triggers in the mid-band. We're just chart reading. Guys, I don't think this one's coming back for you. If you took it from the mid-band you're in, I'm just a little conservative. Just watching it, right? Your charts are really off from mine. They sure are. So guys, let's do this weekend. This is a great something for everyone to do. Let's all start Monday with fresh charts. Deleting old charts, templates, workspaces, starting over with new downloaded files. Guys, this link will walk you through how to do it. It'll take you 10 minutes. The only thing that's a pain in the butt is you have to, when your new charts load, they're going to be like this on different whatevers. Odds favorable, no termination, window of opportunity, smalls aren't outside the large, but there's no divergence, guys. Let's see what happens. And remember, it's Friday. It's Friday. El Samo. It's just fun to say. All right. So El Samo. Just two different companies, Paul. There's a lot of differences between the two, but they're two different companies. All right, El Samo. Everything says down, and you went long, okay? Everything says up, and you're going short, and you're going, or was that your exit from the long? So coming into this termination condition, if this termination condition is really going to hold, see how aggressive this is? Holy crap, you're putting a lot of stock in one blue line. Look at this where your triggers roll and it pulls back, gives you a pivot stop out. It's the exact same price without any of the headache. The exact same price without any of the headache. What's one of the hardest things for new traders? Actually, for any traders, old traders, is that patience piece, waiting for the advantage. Non-farm payroll report at 8:30 a.m. first Friday. Oh, yeah. And it dropped the market 30 or 40 points, Shane. But typically 3 or 4 minutes after news, everything comes back. Let's go look at what news did. I don't trade news. I couldn't care less what it says. Here's 8:30 right here. Termination condition, news releases, market rockets down. Guys, this is a matter of seconds. Exceeds the area. Check this out. Pulls right back to resistance in a mid-band. Oh, patterns. Large triggers don't follow. Market continues down. Guys, this is all 8:30. Everything on your screen is 8:30. That's 15 seconds on a large chart. Patterns hold true. Pivot doesn't make the area. Back to the mid-band. Large triggers don't follow. Pivot doesn't make the area. Back to the mid-band. Pivot doesn't make the area. Back to the mid-band. Finishes the move. Exceeds the area. Overruns the mid-band a little bit. Finishes the move. Guys, that's 3 minutes. This happened in 3 minutes. And the patterns held true. I'm not going to lie. I'm absolutely awestruck all the time at this software. Fibonacci amazes me. It really does. Termination, full reversal, 50-50, no divergence, area inside of favorable large triggers. Guys, I hope you're getting paid on this one. If you're still trading, that was your trade, right? Feel free to annotate for you. I think I just did. 13.2 is a termination condition that creates a full reversal that gives odds favorable momentum. Guys, rule number 1 met. Yes? Give me a Y in the room. Small's above the large are wide, they're angled in the direction of the trend. Smalls have broken through all of my areas, the large have not. What do we call it, guys? Smalls have broken through, large have not. What kind of trade is this? 50-50. So if I have a 50-50, what's that one word that gets me giddy about my entry on the 5-1? What's it got to be? Perfect. What does perfect mean? Perfect means smalls well outside of the large. Perfect means no divergence on the pullback. Perfect means rock star area to take that trade from. Paul loved everything about it. He took profits on his first one. Because it's 50-50, because there's divergence potential, he says, if divergence prints, I'm out. Paul's guaranteed $170 on this trade. Stack advantages, Ben. Absolutely. Paul, perfect execution. And look at that. Straight to Fibonacci resistance. Great management, Paul. Paul had a reason for everything that he did there. He had a reason for why he looked for the trade. He had a reason for why he entered the trade. He had a reason for why he moved his stop during the trade. Paul, where was your second profit target? Were you going to Fibs? Darn right you were. So what is that? In at 22, out at 52. That's $300, $400, $400 trade. What if that's the only one you got today? You did that 5 times a week. That'll probably pay for your car. Might cover a mortgage, right? $96,000 a year for patience, for advantages. This is how I've retrained my brain, guys. Paul, great trade. Now I'm losing momentum, right? I'm at the tail end of momentum on a 50-50 with divergence. Who's mad that they missed that first one? Who's mad that they missed the perfect one? And they're like, well, the market owes me because I didn't have the confidence to take that last trade because I don't know my rules well enough. Elvis is making a comeback. Are you done trading into areas? Fight it. Fight it. Why fight? Let it roll. Fight. Fight. Ugh. You could have got a better entry over here to pivot stop out. Small's on the correct side of the large. Elvis, good job. But man, why so aggressive? Why do you have to be first? These guys don't care about your 5 contracts. These guys want you to jump in first so they can take all of your money and then frustrate you and have you miss the good trade. Just a little aggressive, Elvis. Something as simple as letting the smalls get above the large increases your odds dramatically. Right there. There's a pivot stop out at support, creates a third divergence. I love that one. And Ricky Bobby's a smart guy, Ed. There it goes. Guys, how amazing is that? Lost the momentum on the 13-2, losing momentum on the 5-1. Just little red flags. Little chart reading items. Was anybody mad at Paul? Paul, you took the perfect trade and I didn't believe it. So I'm going to take the less than perfect trade. I'll show you. I'll teach you, market. They don't care, guys. Good bottom. Odds favorable. Hadn't quite reached that area. Beautiful pullback. Money, money, right? Nice job, Arender. Is that your third trade today? You batting 100? Batting 1,000? Elvis. $10K. You look like a totally different person today. I love it. I love everything about it. I'm listening, Elvis. Nexgen Ben before. All the areas break, no termination, smalls outside, you enter at the area. White bar coming into on the small triggers. That's an old MB trick. After. Recognizing your first trouble spot on a medium probability trade. Take the money, right? 62 to 65. All day long, Ben. Nice job. First one was 1100. This one was 375. That's a pretty good day, isn't it? I could be happy with $1,400 a day. Was that $7 grand a week? How much fighting did you do today? How much hoping did you do today? Take care. Appreciate you being here this week. Thank you so much. And great trading today, man. Great trading today. Elvis, what have you noticed? You took naps in between. Nice. Anything can happen on the 13-2 is not your trade, especially with diversions. I think that that's good. Others also get in and the down triggers before the break actually occurs too. Seems the moment it's hard to gauge exactly where up begins in these fakes. That's it. Elvis, are you ready for the most important phrase in trading? Who cares what the other people are doing? Elvis, your job is to make money, right? What's the easiest way to make money? Having advantages? I'm going to show you the exact same thing. Here everything says down. Here everything says down. The market might break. It might hold. Shoot, I don't know, right? I don't know yet. I've got odds favorable momentum to the downside and a downtrend. I've got odds favorable momentum to the downside and a downtrend, right? But here, it holds. It is hard in the moment. And this is why you have to have a solid set of rules. In order to go long at a termination condition, I'm going to look for a pivot stop out on my smaller chart after the after the small triggers get to the other side of the large, signaling that momentum is slowing. Paul, take care. So Elvis, and this is just quick, top of my head, right? Just top of my head. Where does that happen on this chart? It happens, this is where your small get above the large. Do you see it? There's a pivot stop out. On your 5-1 chart. This is the first time that your small begin to get above the large triggers. Right about here. Here's your large, these are your synthetics. Smalls get above the large, you get a trend change, right? Do you see it? Let me use the pen. Smalls are down, odds favorable momentum. Make this easy to see. Smalls are down, come on, pen. They're down. Now they cross up, but they're still below the triggers. Now they start to weaken the triggers. Now they get above the large triggers. Okay, so there's condition 1. I'm going to wait for the small triggers to get above the large triggers. This signals a slowdown. Even gives me a different colored background. And now I'm going to look for a pivot stop out, which means that because there's still large triggers down, because there's still momentum, very often that market will come back and retest the low. There's my pivot, divergence low. There's my pivot stop out. And then it becomes pretty easy. So if we back this up a little bit and you see what's happening on your larger chart, initially, odds favorable, right? Everything is screaming down. That's a big fight, Elvis. But we're into an area with the potential to hold. By the time you get a pivot stop out with the triggers over here, this is slowed down. And after it slows down, you increase the chances for success because you're not fighting. Because how many times with this look right here does it smash through? Odds favorable, smashes through. Odds favorable, smashes through. Odds favorable, smashes through. So if it's really going to be a bottom, odds favorable smashes through. There's no longs here. If it's really going to be a bottom, like honest to goodness, going to be a bottom, going to be a top, small triggers are going to get to the correct side, right? There's so much momentum, it's probably going to retest. This isn't a good termination condition. Debbie, take care. Thank you for being here. Elvis, it's that patience piece that keeps you from having to take a trade 3 or 4 times. Ed, you say you don't always see it right away. If you don't always see it right away, it means that you haven't practiced it enough. It means that your rules aren't clear enough. So Elvis, what I typed out there, I'm not writing rules for you, but what I'm saying, in order to go long at a termination condition, or in order to go short at a termination condition, my small triggers have to get to the other side of my large, signaling a slowdown. And I'll wait for the retest because there was so much momentum, and I'll look for a pivot stop out. That's what just happened here. That's not a good termination condition. And this is a potential termination condition here. But this happens if it's really going to be a top. If it's really going to be a bottom. You're going to get that slowdown. You're probably going to get that pivot stop out. Or you're going to get that retest of the key area that you think is going to hold. Look at the difference here. And Elvis, I love that you posted this because I think this is a great lesson. Which one of these, it's the exact same price. Which one of those would you rather put your money on? If this was the only chart that you had. Anybody? Looking for the long, right? Looking for the long. It's not mine. This one belongs to crude oil. But this is one of the things, Elvis, I used to try to go long here, just like you did. Man, look at that termination condition. This is awesome. I'm going long. And then I get stopped out and I say, gosh darn it. And then I have absolutely no ability to recognize that everything has changed. And now I have an advantage after 3 divergences and the smalls above the large. And this was a lesson that I had to learn, Elvis. And this is very much a lesson that I like to share. One of my biggest reasons that I love teaching this class is that I've made every mistake that you guys could ever hope to make. True story. Awesome. That's all we do, Elvis. Aha moments every day. Every day, if you get one step closer, you're great. So check it out. Termination condition. It overruns pulls back to the midband. Do you see it? Large triggers don't follow, do they? And doesn't it close the gap right back to those large triggers? No shorts. What a great pattern. And that's it, Elvis. Now you just keep practicing it. But I think a great thing for you to do, or for anybody to do, is Elvis, go back and find those termination conditions. Do one of these. Put a big green box around it. And then open up your 5-1. What did your 5-1 look like? If you tried to go long fighting everything, you got your butt kicked. If you let the small triggers get to the other side of the large, it comes back for you right at a pivot stop out at support, gives you a better chance of success. And this one doesn't work because you're fighting. But isn't that cool how you can actually watch on a smaller chart? Thanks. You can actually watch on a smaller chart when you develop the advantage. It takes time, guys. It takes effort. It takes study, it takes pictures. And Elvis, thank you for posting that picture in here, because I think that we just gave a great lesson because you were willing to post something in here. So thank you for that. What a great way to end the day. What a great way to end the week. Guys, just so you know, for those of you that have been following, my week has been dedicated to following this example plan that I put in the room. 100%. Every trade that I take fits this plan. All right? I'm going to put the plan in the room for you again. I'm not saying that this is your plan, but I think that you should write something similar for that first 30 days. Here's my results. I only trade pre-market. Here's my results from that plan. I'm up $1,500 on the week on 7 trades. I'm at 87.5% winners. That's it. Guys, I'm not doing anything special. In fact, what I am doing is I'm watching a lot of trades that I know will probably work go away, because I want you guys to embrace simplicity. I want you to understand that when you focus on one thing that's been proven to work, your odds of success go through the roof. This is the hardest part about day trading, guys, is patience, sitting on your hands, waiting for the advantages. It's paying dividends for me right now. I don't, oh, actually, Elvis, yeah. So here, you can do this. Go to the Nexgen software site. And once we're done with this one, let me shut it down.